Hi, everyone, and welcome to our strategic analysis of Gap Incorporated. Gap Incorporated is a well-known American apparel company that operates a portfolio of brands including Gap, Old Navy, Banana Republic, and Athleta. Each brand targets a distinct customer base, with Old Navy serving value-conscious families, Banana Republic offering elevated lifestyle products, Athleta focusing on the activewear market, and Gap aiming for mass appeal, though with mixed results. Currently, Gap Incorporated employs several key strategies to stay competitive in a rapidly evolving retail landscape. One of its core approaches is brand differentiation, with each of its major brands, Gap, Old Navy, Banana Republic, and Athleta, positioned to serve distinct customer segments and minimize internal competition. The company is also undergoing a digital transformation, making significant investments in e-commerce, mobile shopping, and supply chain technologies to enhance efficiency and improve the customer experience. Another major focus is store footprint optimization. Gap has been actively closing underperforming stores, especially in North America, while expanding its presence in online and international markets. In addition, Gap is committed to sustainability and inclusion, aligning with ESG goals by emphasizing sustainable sourcing and diversity across its operations. Finally, Gap follows a global strategy of think global, act global, which means offering similar styles and marketing strategies across both domestic and international markets to build consistency and scale. These strategies align with class frameworks from chapters 5 through 8, particularly broad differentiation, broad low cost strategy with Old Navy, and best cost provider tendencies with Athleta and Banana Republic.
To better understand Gap Incorporated's strategic position, we conducted a comprehensive analysis using key tools from our coursework, including macro environmental analysis, Porter's five forces, the value chain, VRIN, and financial analysis. We then distilled our findings into the following SWOT summary. Starting with the strengths, Gap Incorporated benefits from strong brand recognition and a legacy that spans decades. Its multi-brand strategy encompasses Old Navy, Gap, Banana Republic, and Athleta, allows the company to reach a wide variety of customer segments. The company has also made progress in strengthening its omnichannel channel presence, especially through investments in e-commerce and mobile platforms. Additionally, Old Navy plays a crucial role by offering cost-conscious fashion that appeals to a broad audience. However, there are several weaknesses. The Gap brand, in particular, suffers from a lack of clear positioning. This creates confusion for customers and weakens brand identity. The company has also struggled to keep pace with fast fashion industry, often reacting slowly to emerging trends, high fixed costs primarily due to legacy brick and mortar stores further strain profit, especially as more consumers shift to online shopping. Looking at opportunities, there's a significant potential in expanding Athleta, which operates in a high growth, high margin segment of the market. Gap can also continue investing in direct to consumer and social commerce strategies to enhance customer engagement and loyalty. A rebranding of Brand Republic could help it reclaim relevance in the elevated lifestyle space, and globally the company has opportunity to grow in less saturated international markets. Still looming threats could also impact progress. Fast fashion and direct to customer brands like Shein and Zara continue to disrupt the market with quicker production cycles and sharpened trend alignment. Economic uncertainty is impacting spending, while supply chain disruptions and inflation are increasing operational costs. Finally, there is a risk that Gap could become culturally um,
Irrelevant.
irrelevant, especially among Gen Z, if the brand isn't refreshed and modernized.
From this analysis, we've identified 3 strategic concerns that Gap Incorporated must address. Brand identity confusion. The Gap brand lacks a clear market position and overlaps between brands dilute their individual impact. Number 2, legacy store underperformance. This company's shift to digital hasn't happened fast enough to offset the financial strain of underperforming physical stores. And number 3, the lag behind agile competitors. Brands like Zara and Shein are outpacing Gap with faster design-to-shelf cycles and better trend responsiveness.
To move Gap Inc. forward, we propose 2 key recommendations, one traditional and one moonshot. We suggest a focused brand refresh for both Gap and Banana Republic. For Gap, launch a capsule collection, collaborate with influencers, and lean into sustainability storytelling to rebuild cultural relevance. For Banana Republic, reinforce its identity through curated premium lifestyle collections that tell a clear story and appeal to aspirational shoppers. This aligns with broad differentiation and rebranding strategies from class frameworks while improving brand positioning and clarity. Athleta is a proven growth engine, so we propose opening a flagship Athleta experience store, particularly in urban and high traffic lifestyle centers, scaling personalized shopping through AI-driven DTC platforms, creating exclusive digital fitness content, community events, and brand ambassadors to build a lifestyle ecosystem around Athleta. Additionally, we built our loyalty rewards and gamified shopping via mobile and social platforms across all brands. This takes a best cost and DTC strategy to the next level, offering a highly differentiated and engaging customer experience while unlocking new revenue. In summary, Gap Inc. has a strong foundation but must act decisively to modernize operations, clarify its brand identity, and engage younger consumers. With strategic investments in Athleta and a reinvention of core brands, Gap can position itself as a leader to the next era of fashion retail. Thanks for watching our analysis of Gap Inc. We hope you enjoyed our presentation.